Hello everyone, today is Friday, August 28th, 2020. My name is Evan and welcome back to our weekly stock market analysis video. If you're new to these videos, welcome. We break them up into two parts. In our first part, we're going to dive into everything that went on this week in markets. So we're going to look at performance, internals, sectors, volatility, credit markets, really pick apart sort of everything that stands out and looks interesting. And then in part two of this video, we're going to dive into the charts. We're going to put everything into context, look at those longer term trends, and try and uncover some opportunity looking into the next week. So hopefully that sounds good to you. Let's dive into this week's action. A couple of the headlines here is we saw stock market equity momentum accelerating. So in fact, it's not just prices continuing to, slowly grind higher. We actually saw in most cases acceleration to an already sort of frothy market by lots of standards. So the full chase effect is on right now for stocks. We had the annual Jackson Hole Fed event this week, and basically the takeaway there was the Fed is just going to continue to remain accommodative and keep interest rates low in hopes to continue to stimulate the economy. And even if that means inflation ticking up, it seems like they are willing to sort of bite the bullet there. And we've been seeing that in sort of the data for some time now. Oil prices higher, commodities have been working. Metals and silver and pretty much everything, lumber, has been already moving higher kind of ahead of that and seeing it. So that was sort of the takeaway there. And we saw interest rates continue or basically making another pop to the upside. So for basically the past 2 out of the 3 weeks now, we've seen interest rates getting a little bit excited there on the upside. We'll talk about that more in part 2. So let's dive into just the performance here to start things off. The right-hand column is the 1-week performance. You can see it was green across the board. This is equity market performance specifically. And we had, contrary or different from last week, we had the Nasdaq 100, which was really kind of, in its leadership status, kind of pulling the rest of the market higher. That was last week. And then if we look at this week, we had some company working with us to the upside here. So the Nasdaq was up almost 4%, but the S&P was up over 3%. The Dow Jones was up 2.5%. Russell, the weakest, but still up 1.5%. So there was more sort of broad participation to the upside this week. Even international markets here up 2% on the week. If we take a look at internals here, it kind of speaks to that theme. We did see the number of 52-week highs jump up or continue to or reclaim back to the upper mid 300s. That's good to see. That is healthy to see. Remember last week we saw this number starting to dip a little bit, and it's something we wanted to keep an eye on. So the fact that we actually did get more participation, more stocks hitting new 52-week highs, that is a net bullish good thing here for the market. Cumulative AD line about 2100 to the upside over the 5 days. That's strong too. And the percentage of stocks is above the 20 SMA, about 70% to the upside. So all around, some pretty good participation there in terms of internals. If we take a look at sectors here, it was almost green across the board. So top 3 sectors: communication services, technology, and financials. It's a pretty powerful group there at the top of the list when you have all 3 of those sectors working. And on the downside, we had utilities, healthcare, energy. 2 of 3 of those were green. Just utilities here ended slightly here in the negative. And they've been a little bit of a laggard here over the past, really, frankly, couple of months. If we take a look at volatility this week, we did pop here in VIX and basically the term structure right down the curve. Not a huge increase here, but we did see it jump and taper off a little bit towards the end of the week. But even the 3-month rose, 6-month, 1 year. So not a whole lot to say there, not a whole lot of insight. But basically, the markets were very high. Were very strong this week, right? So we did see 2 to 3 and 4% gains to the upside, but we actually saw VIX increase this week. So you could read between the lines there and say that's a little bit of a kind of a negative divergence or a little bit of a caution, or however you want to read into that. I don't think it's a mistake, but something we can keep our eye on. It's basically unchanged, but in the perfect world, a 3% rally to the upside pulls air out of the VIX and it actually falls. Credit markets here, again, something to keep an eye on. This is kind of in tandem here with rates popping, but LQD investment grade is red again on the week, -1%. High yield managed to actually catch a little bit of a bid this week, but there's been a little bit of warning signs coming out of here in the credit markets. Something we'll still need to keep an eye on. Nothing super convincing yet or very alarming, but I think it's worth at least paying attention to, keeping a pulse on. That's what we try and do in this video. Now, interest rates, again, we saw basically rise really further along the curve, the 10-30 year, you can see popping over 10%. Gold was up, silver was up, oil was up. So that was sort of how things we're looking at on the more broad commodity and interest rate perspective. So when we kind of take everything collectively here, we've got a pretty good report card. Volatility still a bit concerning. Credit market, a little bit in the penalty box there. So I give this week a B in terms of the quality of the rally. Nice passing grade. Had some good breadth behind it, but certainly didn't pass with flying colors on all check marks. Now, we like to end the slide here with our Merlin exposure, so our active investment trading strategy that we run. We have free trials for if you're interested and a lot more information about. But basically, this is the exposure this week. You can see it's essentially split between the yellow here is tech. This light blue here is tech as well. It's just electronic tech services, and then the gray here is basically biotech. So it's essentially weighted a tech biotech heavy weighted composition right now, and it's fully exposed. And again, I always like to sort of leave this disclaimer here is this is not a portfolio that's going to be catching 3, 4, 5 day moves, right? So if the market dips 3 or 4, 5, 6, even 5%, we really don't care. We're not playing in that realm on this. This is a longer term, at least 4 to 6 week out portfolio. So that's the way we think about it. It is active, but certainly not going to be nimble, certainly not trying to prevent from every wiggle. So make sure you keep that in mind when you look at this. I know a lot of people like to see this, but it always just, scares me a little bit on how people interpret this, because obviously there's a certain model here that you need to understand how it works and what it's doing to make this meaningful. So hopefully that makes sense. That rounds out part 1. I'll be back in just a moment here with some charts. All right, here we go. We've got TC2000 open. We've got our equity market grid open here. So we got S&P in the top left, Nasdaq top right, IWM Russell 2000 bottom left, and ACWX, which is international minus the US, in the bottom right. Price is the white dashed lines on all of these charts, and we have our custom smart trend filters apply to all of these charts. It's a simple price and volume based indicator which measures trend and strength of trend, or directional sort of momentum. There's more information at the link top right if you want to learn more about how that indicator works. So if we look here on a weekly time frame on all of these markets, you can see essentially everything was higher. We've had a bullish outlook here. They've been in bullish trend formation for quite some time now, so there is no change here on the weekly time frame whatsoever when it in respect to trend or trend outlook. If we go down to a daily time frame on all of these markets, the only thing to sort of point out here is the Russell 2000 and the ACWX. So essentially we had just a little bit of yellow here. This is why we like the smart trend filters, because basically it can help us stay on trend without getting whipsawed and without losing sight of the bigger move. But we basically had this bullish backdrop. We had some little bit of a neutral transition, some turbulence, as I like to say sometimes, on Monday and last Friday. That resolved itself. It held. The trend moves higher. Price moves higher. Back to a bullish signal there on the daily chart. And the same thing for ACWX. We basically had a few days of turbulence here on Monday and late last week. That resolved itself. The trend is higher. Price held above it, and life continues on for the bulls. That's basically it. There's not much else to say or really, dive deeper here in terms of trend and trend outlook. These are both still weekly and daily time frames, bullish outlooks for all of these markets. Remember, this doesn't give you overbought or oversold or anything like that. It's directional, and it does continue to suggest that there's good momentum here in the directional moves to the upside. So let's jump into the candlestick chart now. Let's get a little more granular. Let's take a little bit of a closer look here at some of the price action. And if we look at the S&P 500, you can basically see after breaking out above the prior all-time highs, it's basically just been a rocket to the upside. There is no overhead supply, so there's no levels to really think about or pay attention to above us in terms of overhead supply, and you're seeing the effects of that now with this gap up that broke to new all-time highs on Monday, and then we continued to just ratchet higher throughout throughout the week here. If we take a look, basically, from I think this session here, we've only had one down day. So I think we've had in the past 10 or 9, 10, 11 trading days, we've had just one day that's been down in the S&P 500. So, clearly extended, clearly it's overbought on most traditional technical measurements. But we know that markets can defy gravity, and strong uptrends are more likely to persist than they are to reverse. So you have to be careful if you are fighting this market. I don't think it's been wise to. I think we've been pretty clear on our directional stance on all of these markets. And as we always like to say, it will end. Sometimes it ends badly. Sometimes it ends in a minor sort of sense, but it will end at some point. There will be a top. There will be a more meaningful pullback, but picking that is uniquely difficult. And we always like to sort of remind everyone of that in these videos. So the way we're looking at this now basically is, look, the trend is up. It is extended, but until there's a meaningful change in direction and at least taking out a prior day's lows, I think that's usually the first step in strong trends that we look at here. So in this case, if we started to actually break this trend line and take out a prior day's lows, that would be at least a short-term signal, if you're playing in that space, that something is changing. But for now, we don't have the ingredients of that. We basically have a market that's just melting up, and it's leaving everyone that's not invested in it behind. So when as this game continues, right, as this continues to stretch, the risks do increase, right? So of course there is, that rubber band analogy here. As markets stretch to one direction, there is a tendency to eventually kind of break or reverse into the other direction. And so as we fuel up, we can think about that analogy as risks opening up, and as if markets get more parabolic and more sort of V-shaped in its direction. But again, you just have to be aware of it, and you have to have your stops in, and it doesn't mean you can't participate. You can participate as long as you're managing risk and thinking about that scenario accordingly. So that, I think, is kind of what we're seeing here. We're just seeing the chase factor into perhaps maybe the end of the month. I think the end of the month is Monday. So maybe get some more markup on Monday, and we'll see what the new month brings. From a more intermediate term perspective, this is the level, 3,400. So basically, the very minor level, breaking below a prior day's lows. Again, if you're playing in that game, you can get a small pullback, but 3,400, if we start to lose that, that would be a more meaningful sort of development there. It would be about a 4% move to the downside at this time. So that's the bigger level that I'd be paying attention to. Now, the Russell 2000 is still where, again, it sort of, I posted this chart on social this past week, but if you're looking for an excuse for this market to continue higher, or if you're looking for areas of the market that aren't so extended and frothy to the upside, look no further than the Russell 2000, because it's basically been consolidating here for the majority of August, and it hasn't broken out. It's just been kind of holding up here. It retested 153, which successfully held. So this looks like a good potential rotational candidate. It hasn't quite happened yet, and we'll see if it does. Nothing says it has to, but certainly, if the Qs, the S&P, the Dow start to take a bit of a breather, and small caps pick up the slack, then certainly that could just help fuel the wave here, into the next month. So let's keep that on watch. 153 on the downside, that's what I'd be paying attention to. On the upside, you basically have the highs carved out here around 159. If we go to the Nasdaq 100, you can see here, continues to just run away to the upside. Volume's been increasing. Had a pretty heavy volume day, which was a down day on Thursday, and then we had pretty much an inside session here on Friday. So who knows? Maybe we do get a little bit of a short-term top getting put in here in the very short term at least. The levels that I'd be paying attention to would be down here around 265 to 268. I mean that to a more intermediate perspective, which is basically 9% below where we are, is where we would want to hold. So in my perspective, in my eyes here, a 10% pullback in the Nasdaq, perfectly healthy, completely reasonable, and this could still be technically a very strong, healthy market, even despite a 10% pullback. If we can hold into this slot here, I would say that is still healthy price action. So again, perspective there matters. The Qs, though, continue to melt up and help lead this market higher. We never really look at the Dow Jones much here, but I posted this chart, and we talked about this chart in our past videos, of essentially being just this picture perfect sort of bull flag here. And just like we kind of said here with the Russell, where this is a good, potential rotational candidate. I mean, that was sort of the same read we had here in the Dow when it had this strong move up in early August, digested it nicely, and then you can see this really, kind of just broke out and continued to work this week very nicely here, adding to the support to this market. So, that really is kind of the upper level price action, or I guess this is the more specific lower level price action here that we're looking at. Everything's still in uptrends. Risks are potentially increasing on that rubber band snapback, but again, timing that is pretty difficult. So let's jump into some other markets now. Let's go to our credit markets here. Look at LQD, JNK, weekly time frame. These things are still looking good. If we go down to a daily chart on investment grade, you can see this has been in a bear trend here, LQD, for the past about 11, 12 days or so, and it continues to struggle to find some support. Something to pay attention to. I mean, JNK is holding up. So this is the high yield side, and this is still holding up. Maybe that's Fed purchases, maybe not. But JNK in here is still managing to hold up. We'll keep an eye on both of these, investment vehicles, credit vehicles, which can certainly help. Certainly flag danger before equity markets pick it up. The VIX here on the bottom left, you can see, did get pretty, we had a 5% move, or two back-to-back 5% moves this week in the VIX. So we briefly got above trend. Notice that our trend signal here did not go bullish. It actually stayed yellow here, and correctly so, because we sort of faded back into the end of the week here, down 6% on Friday for the VIX. So it's been basically nothing but a sell signal here for the VIX for a very long time, since April. We had a brief stint here in early June where we got a little bit of sort of some whipsaw, but it's basically been in a sell signal here for the past what is this, 4 months now, 5 months, and so far that hasn't changed. TLT still in a sell signal here on the daily chart. Weekly chart is still holding on to neutral. Be interesting to see if this does start to cross down. I think TLT would be an interesting week. I think for TLT bonds, is, in yields across the different ETFs. I think this will be interesting next week to see how they hold up and to see if some of this recent sell-off gets more meaningful. So that's something certainly I'll be paying attention to. In terms of commodities here, GLD, silver, both bullish up here on the week. 1% for gold, 3% for silver. Oil was up 2%, commodities up 2%. So basically, if you're thinking about inflation and some of the comments that the Fed made, this is been happening, right? And DBC is well off of the lows, which is not a perfect ETF for commodities, but it is a ETF for commodities that has been working. Silver continues to work here. It's been consolidating, still mostly consolidating. And then gold on the daily chart. So we had a sell signal in gold. We talked about that being kind of the first in some time. It got back to neutral here Thursday and Friday. So we'll see how this develops. Both gold, silver still seem a little range bound there in the more immediate term. If we look at sectors here, sectors on the weekly time frame, it's basically bullish or neutral signals all around, which again speaks to some good supportive breadth. This is the longer term picture. If we go down to the daily picture, we do have some sectors in bearish trends. So we have energy, which is printing a bearish trend. We have biotech in a bearish trend. We have utilities in a bearish trend. We have healthcare neutral. We have real estate neutral. So let's break down some of those right now. So I think actually the first and most interesting here is financials, because financials, remember last week, were in a bearish trend. They started to transition down. It was right in this point when we did our market recap, our last Friday's video, right in here, and our trend outlook switched over to bearish on this session. And you can see basically, actually, let me just make sure that is correct. Yeah, so it was basically, it had been bullish to neutral, and then it finally flipped bearish right in here. And then you can see that lasted for about 1 day, and then it went back to neutral and then bullish into the end of the week here. So financials had a good flip this week, and we saw volume come in, and we've seen volume now come in for financials, which I think is kind of interesting here on kind of all these bottoms. We saw extra heavier volume come in there. We saw heavier volume come in here, and we saw heavier volume come in right here, right? So if you look at the lot lower volume chart here, you can basically see we saw increased volume on these expansions off of the lows here for financials. So, they've been a laggard sector. It's been a tough sector to be in, but it does seem to be, getting some, rotation or some bid into these sell-offs. And I think that's interesting, and it's back to bullish trends. So that is notable. That is something that changed. If we look at the XLE, this is currently, arguably still holding on from a price action perspective. It's still sideways and range bound, but our near-term trend filter here is bearish on it right now. So it'll be interesting to see how this plays itself out. Price action wise, no changes, something to pay attention to. Kind of the same thing with biotech. So a bearish trend reading on the daily chart, but you can see it is trying to hold in here. Biotech's been in the penalty box now for about a month or so since topping out here in mid-July, and it's trying to find a bottom. It's trying to lift up here. A bunch of inside kind of overlapping days getting printed here. I'm hoping, rooting for this to hold on and rotate to the upside, just given the exposure we have in this sector. But the jury's still out here, and it is trying to stabilize. I do think there's some potential opportunity, specifically in some of the underlying stocks in that sector. Utilities have basically been nowhere for the past 4 months. Since April, they had a nice rally off of the lows initially, and then they've basically gone sideways here. We do have a bearish trend reading on the daily chart, but you can see more broadly here, they've basically gone nowhere. And last but not least, real estate is neutral here, trying to turn back up. Looks like it wants to try and potentially make a run and start to break out. This could be a pretty powerful and actionable signal if it does. You can see it's been very, very tight here for the past month, and more broadly, it's been mostly sideways as well. So XLRE, something to pay attention to heading into next week for some of that breakout momentum. And again, keep an eye on just generally speaking, the IWM I think is still pretty interesting too, as it moves sideways and has been pretty tight over the past couple of weeks of trading. So that is it. That is what I got for this week's analysis. Lots going on. Most mostly all still bullish here. Remember, doesn't mean you can get complacent, but it's certainly been paying to try and sit on your hands and enjoy some of the trends that have been developing here for the past weeks and months. So thanks as always for tuning in and watching. You can subscribe to our YouTube channel, keeps you up to date with all the latest videos, or follow along at thetraderisk.com. Have a great weekend, and we'll see you back here next week for the midweek video on Tuesday.